All right, hello everyone. Thank you for joining us today. We really appreciate you tuning into this webinar. And the more you learn, the better the Airbnb host you can be. And that's what we're here to do, is to help you become a smarter and more efficient Airbnb host. We're constantly seeking experts to present relevant and helpful tips to you to become a better Airbnb host. And today our topic is very special. It's our second annual tax webinar. And today we're going to talk about preparing your 2015 Airbnb taxes, presented by Derek Davis of SharedEconomy CPA and Bonsai, a tax app that can help Airbnb hosts and other independent contractors. Derek, as I said, is the founder of SharedEconomy CPA and Bonsai, two very great resources for Airbnb tax information. Today, Derek is going to discuss a few things. So first, he's going to discuss what is year-end tax planning and how does it affect Airbnb hosts, tax tips and considerations for Airbnb hosts, and various types of expenses to incur and how it will be reported on your tax return. Now, first things first, viewers, we're going to cover a lot of information today. So if you have any questions, please feel free to email us during the webinar at info@learnairbnb.com. And you can see the email on the screen right now. Let me share that with you guys so you can see that. And this is right here. So if you have any questions, info@learnairbnb.com. So if you've been hosting for a while, you're earning income as a 1099 contract worker, and more commonly known as an independent contractor. With this classification of income, you're open to many different deductions and tactics that will help you reduce your tax liability. So over the next 20 minutes, Derek will walk you through preparing your taxes for 2015 and how to reduce your tax liability. So without further ado, I'm going to turn it over to Derek from SharedEconomy CPA and Bonsai. So Derek, let's get this started then.
Hey, thanks for having me.
Thank
I
you.
really appreciate it.
Yep.
Okay, so I'm going to jump right in the topic, and I just want to let everyone know that the topic is kind of dry and boring, but there's a lot of good context, and hopefully I'll help you save money this upcoming tax season. So let's jump to it. All right, so here are the two overview things that you want to think about when considering what tax form you want to put it on. Schedule C, you're going to be exposed to self-employment tax, which is at 15.3%. But one of the cool things about the Schedule C tax form is that you can, if you have a loss on your Airbnb, you can net that against other active gains. So what I mean by that is, if you're making money as a rideshare driver, but you have loss as an Airbnb host, you can net the two against each other. And the other thing to consider on a Schedule E form is that you don't have self-employment tax, but you aren't able to net the income and losses against each other. So on to tax planning. Here are the individual tax rates and how much you make per bracket. The important thing to note when figuring out tax planning is that you can, if you're on the border of, say, 36,900 or 36,910, there's a very small differential that you'll make, but it'll push you in a much higher tax bracket. So it's really important to kind of know where you stand compared to what tax bracket you fall under. And it's also important to note that this is your net earnings. So this isn't the amount that's going to be reported on your 1099. This is the amount that you're actually going to take home. So it's your income minus your expenses. Some important things to note on tax planning for home share individuals is that if you own your home and you have a mortgage payment, you can potentially itemize and deduct your mortgage interest on your Schedule A. However, it's important to note that if you have a large level of income, there are certain phase outs. If you make above $254,000 for individuals, and then for joint filers, so for example, if you're married, that threshold gets pushed up to $300,000, $305,000 to be exact. And what a phase out means is that a lot of the itemized deductions that you would take, you begin to lose them because you're making too much money. Another important thing to note in determining your filing status is the personal exemptions. So personal exemptions are just amounts that you're able to take off your income, and they are approximately $39.50 for individuals who are single filers, and if you are married filing jointly, that amount goes up. So AMTs are alternative minimum taxes, and these are minimum taxes that you'll have to pay regardless of your deductions and write-offs. And pretty much what this is the IRS trying to say that, hey, even though you made a lot of money and you have a lot of expenses, you're going to have to still pay minimum taxes regardless of your expenses. And this is kind of just the IRS's way of saying that, hey, regardless of how savvy you are with the U.S. tax code and how much you can write off, you still need to pay up your taxes. So some important kind of tax planning considerations are whether or not you want to contribute to a retirement plan. So the two biggest ones that we're going to cover is the solo 401k as well as a SEP. A SEP is a self-employment tax plan. So generally speaking, the SEP are good accounts if you're a self-employed individual and you also have 1 to 5 employees that you want to provide benefits for. However, for the solo 401k, it requires matching, which the self-employment plan doesn't usually require. So what matching is pretty much if you have 1 to 5 employees, for example, if you have a growing Airbnb business and you hire some people and you provide them with a 401k plan, you need to match whatever their contribution is. So for example, if their contribution is $1,000, you have to match that with another $1,000. And generally speaking, if you do not have employees and you're simply working for yourself and you're just a solo Airbnb host and you're growing the business by yourself, these generally aren't the best options for you. These are only preferable options if you have a growing Airbnb business and you hire people. So traditional IRAs and Roth IRAs, these are probably the best plans for solo Airbnb hosts. And why these are great is because it kind of thinks about long-term investing. And the one really important thing to note is that if you file for a traditional IRA plan and you put your Airbnb income on a Schedule E, those contributions are disallowed. And what the IRS has said is that ineligible contributions relate to ones that you receive from rental income. So it's important to note that if you do decide to contribute to a traditional IRA, it's important that you record your income and expenses on Schedule C and you record as active income. So with the traditional IRA, you're able to take the tax benefits now, and when you withdraw from those funds, that's when you get taxed, whereas the Roth IRA is after the fact. So, you invest it now and you're not able to take any tax deductions, but when you withdraw the account, you receive it tax-free. So capital gains and losses are really hot topics for Airbnb hosts who own their own property and they are looking to depreciate their home. So what happens when you depreciate your home is that you're able to take a lot of tax benefits up front. So in this upcoming tax season, if you depreciate your own home, you're able to write off more now. However, if and when you do sell your home further down the road, you have to recapture the amount that you depreciated as a capital gain. So to put some numbers in, say you purchased your condo for $100,000 and you depreciate it all the way down to zero. When you sell it at $200,000, you have to capture all $200,000 as a capital gain. Whereas if you did not depreciate it, your capital gain would simply be $100,000.
So Derek, on that capital gains, do you think people should do that? Is there a certain type of Airbnb host that is better to have capital gains and to depreciate their home, or what is the balance in that, or any suggestions around the depreciation?
Yeah, totally. Well, one, you have to own your own home. So if you're running like 10 units or more and you're renting them out, depreciation is not applicable to you. So the first kind of barrier to entry is you have to own your own home. And I think two, the second consideration is how much money you're making. So if you're making a lot of money from Airbnb, depreciating might be up your alley because you're able to take that tax advantage now. However, if you aren't earning a large amount of money, then it's certainly not that favorable because you don't want to start running a loss on your Airbnb. The really important thing to note is that if you have 3 years of consecutive Schedule C operating losses, what the IRS will then say is that you're operating as a hobby and not as a business, and that's a you're exposing yourself to a potential IRS audit. So it really depends on your level of income, and if you're grossing, for example, maybe more than $20,000 to $50,000, then it might be interesting to depreciate your own home. But if you're making less than say $10,000, it generally is not as favorable. But again, it's a case by case study, and you just have to kind of run the numbers to figure out which is a better tax deduction, and also what are your future long-term goals of Airbnb.
Gotcha. All right, cool. Let's continue then. Thank you.
Yeah, definitely. So the next big thing to kind of consider is if you run a management company as well as if you are paying for education courses. So resources such as Learn Airbnb are great for you because not only you're able to learn and build your Airbnb business, you're actually also able to write off those expenses. And so what that means is when you write off the expense, it reduces the amount of income that you show on your 1040, your personal income tax return. So, naturally expenses are your best friend to reducing the amount of taxes that you owe. The next thing to consider is a management company. I think companies such as Pillow are around, and pretty much what these management companies do, at least from a tax perspective for us, is that we're able to then say, okay, these people don't really materially participate and it's more of a Schedule E activity. So we then put the income and expenses on the Schedule E. So, oh, thank you. So education credits or education expenses and management companies are also ways, if you are growing your Airbnb business, to potentially reduce your tax liability. So kind of in a brief summary, tax planning, it's really important, one, to kind of, after you calculate your income and expenses, to see kind of where you fall in that tax bracket. And if you are on the border, it's really important to incur those expenses this year, because after December 31st, 2015, any expenses you incur thereafter, they don't apply to this tax year. So it's important to kind of do year-end financial analysis and see, okay, how much income did I make? What are my expenses and where do I fall? And, if you're kind of on the border, a great way to kind of reduce your tax liability, drop you in a lower tax bracket, is potentially contributing to an IRA plan. And the last but not least, things that I always hear from Airbnb hosts is whether or not they should incorporate. And the incorporations can be either, an S Corp or an LLC. And, generally speaking, what we've found with our clients that do incorporate is that they do provide you with a liability shield. So usually it's more favorable for Airbnb hosts who generally own their own home, and or they have a growing business and they're thinking about potentially getting outside investment and growing their business further. As corp elections, they're a little bit more complex, and therefore the more advanced Airbnb hosts, generally speaking, if you have anywhere between maybe say 3 to 15 properties under management, an S Corp election allows you to take a distribution as opposed to having to pay self-employment tax. So that could be a potential option for certain hosts. But naturally, with the S Corp election, there are a lot of kind of specific rules that you need to follow and specific considerations that you need to take as a host. So before jumping to an S Corp, it's really important to research the appropriate rules and regulations for that. So the next that we're going to talk about is Bonsai, which is simple record keeping. And what it allows you to do is pretty much just connect all your accounts and keep track of every single expense that you make. And naturally, the more business expenses you make, or you record, the less tax liability that you have. And at the end of the year, Bonsai is able to export out all of your transactions for you based on a Schedule C tax form. And the real brains behind Bonsai is it categorizes all your transactions into smart categories that help you maximize your deductions. So these are some of our expense categorizations. So you have professional attire, which is naturally clothing, website and internet related expenses. What we've seen a lot with a lot of growing Airbnb hosts is that they're now setting up their own websites, and they're beginning to build traffic and build their own relationships with potential people who stayed with them. The next is professional networking expenses as well as professional fees. Professional fees can also include your Learn Airbnb fees, which are phenomenal expenses that will help you reduce the amount of taxes that you end up paying. We launched the alpha version of Bonsai earlier this year for this 2014 tax season. And at least 30% of our users had $750 in tax savings. And our top kind of 5% of users had over $17,000 in tax deductions. We're currently live in the iOS store, and we're hoping to build an Android version before the end of this year. So if you want to learn more, the app is currently free, and our website's bonsaitax.com.
Awesome. Well, thank you very much for sharing all that. So, Bonsai is a very helpful app. I've seen Derek demo it, and it's being able to save that kind of money. You're saying if you go back to the two slides, the 750, that's a reduction in the liability for actually having to pay taxes. So they save that actual money. It's not the dollar of deductions they're saving, but the actual dollars that they're going to be paying out in taxes they're saving. Correct?
Right. So these are deductions. So for example, if you have $1,000 in income and you have $750 in deductions, you're only going to be expected to owe tax on $250, which is the difference.
Okay. So this is the number captured of extra deductions that they were able to add and lower their tax. Okay, cool. Yeah. And that's so it kind of pays for itself if this app does go paid, or, helping to reduce your tax liability also helps keep more money in your pocket.
Yeah, so, absolutely. And I think just the overarching point of tax planning is not that many people do it. And so what happens is once it comes time to filing your taxes, you're completely blown away at, how much taxes you owe. But at that point in time, you can't go back and say, okay, I'm going to buy some more stuff to reduce my tax liability. Unfortunately, the cutoff point is December 31st.
Yep, and it's just like four months later when you got to go pay your taxes, you're like, oh crap, I've got to make sure I reduce my liability. So before December 31st, so make it something a habit, maybe even in November, to look at where your AGI is at and see where you fall at, correct?
Correct, yeah. And if there's any extra expenses, learning, buying furniture, it's really important to take those expenses in this year. I can't even stress the importance of tax planning more, because it seems like no one does it and everyone waits the last minute, but it's really the best way to kind of set yourself up for easy and not shocking tax season.
Yeah, it can be a very shocking time for sure. Yeah. So next I'd like to hop into a few questions and take some questions from the audience. So audience, if you have any questions, please email them to me at info@learnairbnb.com. We'll get those answered. We have a few questions to start out, so let's just hop right in real quick. So Derek, if you want to start to share your face, and we can just chat face to face about these then.
Yeah, definitely.
Cool. All right, cool. So the first one is, Derek, I want to know a little bit more about the Bonsai app. You said it's available only on iOS store and it's free. What are the plans for Android releases, or is there a web app that people can use?
Yeah, we're definitely hoping for Android at the end of this tax season, end of this year. But if not, then definitely by the end of the tax season. And in terms of pricing, we're still trying to figure that one out. We're testing different types of revenue model. Ideally we'd like to be free. So I think I think if we can figure out a way to make money on the back end, that's our ideal. But if worse comes to worse, then we may have to charge a small nominal amount, maybe between $1 to $4 a month.
Oh, okay, cool. That's great. And then with that, you said that the app kicks out everything you need for a Schedule C. Does it do it as well for a Schedule E?
Currently, it's simply Schedule C, and the reason being is that we're also servicing rideshare drivers as well.
Gotcha. Cool. All right. So then my next question, and this is something I've gotten from a lot of different students asking, what are some of the common deductions? Okay. And then second, what are the most overlooked deductions? Because like when we chatted before, education was one of them. So the Learn Airbnb course, that is a tax deductible thing for Airbnb hosts. So that's a great one to know. But are there any other deductions that people overlook that, why would they overlook that, such as like gas or, can you share any of those?
Yeah, I think gas is huge. Mileage, anytime you drive to the store for Airbnb purposes, you can write that off. Cell phone is a huge one because naturally you're always talking to potential guests on your phone. So you can write off a proportionate amount. So what I mean by proportionate is you say, okay, my cell phone bill is $100 a month. I use it, half the time for Airbnb, so I can write off $50.
Okay, cool. And then any other, so how about you can write off if you're doing like a rental arbitrage where you're renting an apartment and renting it out on Airbnb, you can write off all the payments you make on that lease, correct?
Correct. So the important thing to note is that what the U.S. tax courts have said is that it needs to be regularly and exclusively used for business. And what they're referencing is a home office deduction. So, like once you say you rent out a house and you turn it into an entire Airbnb, you need to make sure that it's exclusively rented for Airbnb the entire time.
Mm-hmm. Okay, cool. Let's hop into the next one. Does SharedEconomy CPA, do you guys offer text preparation and planning services for Airbnb hosts?
Yeah.
And how can they get a hold of you for those services?
Yeah, definitely. Probably the best way is just to book me on our website, which is SharedEconomyCPA.com. And yeah, this is what we specialize in. So I would say at least 90% of our clients are Airbnb hosts.
Okay, cool. Great. Now we have a question from one of the viewers. For students and others with low income where they have not had to file tax returns in past years, do we have to file if we host, or do we only have to file if our income is at a certain level, like $10,000?
You always have to file your tax return. And I know there are kind of thresholds that you need to make for filing requirements, but I think even if you make no money, you should always file a tax return. Reason being is maybe further down the road you might need to apply for a mortgage, or you need to get financing, and more oftentimes than not they'll look at your tax return. So if you have a big open year, say 2011 through 2013 of just no tax return, that won't look as positive from the lending institution's perspective.
Gotcha. Okay, so always make sure you're filing a tax return, no matter if it's zero AGI or very low, where your standard deduction takes you out of the tax bracket, right?
Yeah, just file your return just to always have it filed.
Yep. Cool. Now we have another question from the audience. So do you recommend forming different LLCs for each Airbnb property, or one LLC for all properties?
So it's really a case-by-case study, but usually for our clients, we recommend one LLC that encompasses all of them. Reason being is more oftentimes than not, you'll have some Airbnb properties that are winners and you'll have some that are losers. So you want to net the two against each other. And also just for simplicity purposes and for reporting purposes, it's just easier to have one LLC. If you have multiple LLCs in California, you're going to have to pay a minimum $800 tax on each LLC. So you're going to start getting whacked on taxes.
Yep. Do you recommend doing the Nevada, Delaware type of thing, or should they incorporate in the state that they do the Airbnb hosting?
I think it really depends on the individual, and if they're looking for external financing, or if they're just doing an LLC for themselves to kind of help protect their personal liability. More oftentimes than not, we file the LLC in the state that they operate in.
Okay, cool. And then the last follow-up question from Michael is, how do you handle having several Airbnb properties in different states? And is there a certain way that you recommend to stay organized? Like, is there different tax laws I'm sure there's different tax laws for different states, but for what you're speaking about is, how how would they handle different Airbnbs in different states? Because I know some hosts are now finding different markets outside of their home market to expand in. So any
Yeah.
tips for multiple state hosts?
Yeah, and that's also a really great tax deduction. So, say for example, you are located in California and you fly to Florida to check out new Airbnb properties. All those expenses and related to travel are all tax deductible. So it's really important that you record all those expenses and write them off, because those are, that can help you save a lot of money. In terms of state filing requirements, it entirely depends on the state. For example, Washington doesn't have state income tax, so you know you won't have to pay state income tax if you have an Airbnb in Seattle. Um, so it's really a state by state and a client by client basis. But yeah, does that answer your question?
Yeah, I mean, so if you have multiple state Airbnbs, you can file just one tax return with one LLC. Is that
Correct.
correct? Okay, cool. That's at least the minimum I want from that. And that, so all your travel expenses going back and forth to either find new Airbnbs or to go service your Airbnbs, you can use those to write off as well, correct?
Yeah. So if you're checking out new properties and or visiting your current ones, what the IRS specifically said is, the bulk of the trip has to be related to your business. So if it's exclusively used to go visit on your properties and make sure that they're doing well, you can write off those expenses.
Great. Awesome. Let me just put the email address up one more time for everybody. So if you have any other questions, make sure you email us at info@learnairbnb.com. And just want to make sure we get your questions answered. We have a few more in the queue right here, so I'll hop into getting those for you real quick. All right, so let's see. So S Corp versus LLC, at which point is it the right thing for someone to do that instead of just doing a personal thing? I know there's benefits on like not piercing the corporate veil and things like that for liability purposes, but tax liability, is there a certain tipping point at which that makes sense?
It's just it's based on your levels of income at that time, as well as where you want to take your Airbnb property. So, it's really hard to put a threshold on it because, you may be grossing 100K in your current year and you're like, okay, well, maybe I'll put it off for another couple years. And then, come 3 months into the following year, you're already grossing 400,000. Then, I think it really just depends on the growth that you're seeing with your Airbnb property, and also where you want to take it. I think those are probably the two biggest considerations when thinking about, which type of corporation to get incorporated with.
Gotcha, cool. All right, so we have another question coming in from Anna. And she says, we own a tiny house and rent it out exclusively for Airbnb and pay a lot fee to an RV park that already pays a local transient tax on our lot. Do we also have to pay the transient hotel tax on our Airbnb earnings to the county, or is the payment to the RV park good enough for us? So do you understand the question?
Yeah, I would have to look at the specific tax code for that county and see. Unfortunately, that's a really specific question. Yeah. So I would have to look at it.
Okay, cool. I'll connect you guys after the webinar then.
Yeah.
All right, great. And then let me just check to see if there's any more questions that we have in the queue real quick. All right. I think that should be it. So also, one of the last things you were telling us is that you are going to be speaking on Capitol Hill. So if you could just tell us a little bit more about that and what you're going to be chatting about, and a little bit more about that.
Yeah, so I think we're seeing a lot of kind of big things coming up in the shared economy workspace, especially all the Airbnb activity that's going on in SF right now. And so I'll be speaking on a panel on November 19th regarding tax policy, specifically for the sharing economy on Capitol Hill. And I think there'll be a few senators, and I think this is going to be kind of just a general catch up on where the shared economy is going. How do you tax it? How do you help build compliance and rules and regulations around it? And I'm pretty hopeful that there's going to be some more guidance for Airbnb hosts after the seminar, and kind of more clear-cut rules, because it's still operating very heavily in the gray. And everything that I'm speaking about today, in a year or two could be completely wrong if they change the rules and regulations. we're trying to just keep up to date with the current rules, but even the tax court rulings we're referencing, they're from 2006, so it's just old, and 2006 is pre-Airbnb, so it could be very likely in a short period of time that everything that I'm speaking about now is kind of obsolete.
Yeah, and that's the thing. It's just the way life is out, in the Airbnb world. Things are always changing, and that's what we're here to do, is to keep you on top of everything else. So,
Totally.
Cool. We have another question from Michael. Are there any differences in deductions you can take for renting out your room in your apartment versus renting out the whole apartment? So I'm guessing there's something with the percentage of floor space, or can you explain a little bit further on that? Whole home versus room?
Yeah, totally. So if you're regularly and exclusively using that one room for Airbnb, and say if it has an attached bathroom, as long as it's regular and exclusive, you can write off the proportionate amount. So generally speaking, you wouldn't be able to write off the living room nor the kitchen. However, if you rent out the entire apartment exclusively and regularly on Airbnb, you can write off the whole apartment. So it's really just a proportionate amount and how much you can write off.
Great. Awesome. Well, thank you very much for that. I don't have any more questions coming in. I apologize for the technical difficulties, everybody, and the few mishaps we had at the beginning, but hopefully everybody found a lot of value in this. Derek, thank you very much. I really, really appreciate your time. And anybody, if you have any more questions throughout, on the replay, or, as we close this out, please feel free to email them over to us, and we'll get the answers over to you as soon as we possibly can. Let me just share one more last thing with everybody, is that the Airbnb course is tax deductible. So if you get the chance to join today, it would be a great thing for you to learn from us, get personal coaching from myself and from our partners. Again, Derek, thank you very much. I appreciate it. To the viewers, again, if you have any questions, you can email us at info@learnairbnb.com or contact Derek directly at derek@sharedeconomycpa.com. Again, thank you for Derek, and we look forward to chatting again soon.
Great. Thank you for your time today.
All right. Have a good one.
Bye.